Welcome back to the final round. United out with earnings earlier this hour, posting a wider than expected loss, revenue dropping 78% from a year ago. And this is similar to what we heard from Delta yesterday. Delta posted a 76% drop in their year-over-year revenue. So joining us now for a little bit more about this, we have Peter McNally. He's ThirdEdge Global Sector Lead. And Peter, great to have you on the show. Let's just start with United, I guess, and then we'll follow up with Delta. But United shares under pressure here, off just around 1%. Just broadly speaking, what did you think of these results?
Well, there are three concerns that our clients have at ThirdEdge about United and airlines in general. Number one is, when does business and international come back? Number two is cash burn and liquidity. And number three, how they're going to compete in the domestic market, which is where really all the flying is going on, or most of the flying is going on like these days. So, on the first part, going through these United numbers, domestic passenger revenues were down 81%. International is still down 91%. And the key on this business and international thing is the most important part for profitability. And our experts have been telling us that they saw business travel down 5 to 10%, like completely gone, never coming back due to things like Zoom. Whereas the Delta CEO yesterday said that they now think that 10 to 20% of business travel will be gone in the new normal. So, and that's the part of the business that was half of Delta's business prior to this. So that, to us was pretty significant. It looks like United did well on the cash burn point of view. They came in on the number of $25 million per day. They have guided an improvement in the fourth quarter back in July to about 15 to 20 million. They need to continue on that trajectory. But Delta was talking about being cash break even by the spring. We'll have to see what United says about that trajectory for them.
Yeah, Peter, I wanted to ask you about that because with Delta, it's interesting. I mean, that seems like an ambitious goal at this point because, like you said, the business traveler might not ever return to the levels that we saw before the pandemic. And then, of course, international travel is also a huge question mark at this point.
Yeah. I mean, look, most of these airlines, pretty much all of them, are positioning themselves for a V-shaped recovery. Capital markets have been open. They've raised money. It's not just dependent on government bailouts. Nobody's in a liquidity crunch yet, and there's hope that all this stuff is going to turn around pretty quickly once we get a vaccine. But we really need open borders to really help these airlines. And United is in sort of caught between a few different things here, in that they came into this not quite in as strong of a position as Delta. But probably, I think generally speaking, people thought it was better than American. But they're facing more competition in the U.S. Southwest is coming into their markets. American and JetBlue have a new agreement that remains to be seen how it will play out. So time will tell.
Peter, we've seen a number of airlines try to get a little more creative with their routes in the face of the significant downturn they've seen in business travel, trying to do more routes to some of these travel or leisure destinations. And I'm curious how big of a revenue driver that you think that can be, just given that the cost of the ticket itself, first of all, isn't as much as a business class seat or a first class seat. I mean, is that sort of, can that be sort of a Band-Aid while waiting for business travel to tick back up again?
I mean, really, it is the only game in town at this point, and they will compete for it. So the airlines are all kind of reorganizing themselves to serve this leisure customer, and it's been pretty significant. That what we've seen to date is in terms of when people are traveling, and it really is tilted towards this leisure customer who's going to pay less and fly.
Peter, do we still have you?
Yeah, I'm still here.
Okay, sorry. Jen, you want to jump in with a question?
Sure. Sorry, I thought I had frozen maybe. Hey, Peter, stimulus, is it worth it? I mean, when you look at the numbers, 25 million cash burn, they're losing money day after day. You said the capital markets are open here. Would it be too early to do something now? Should we be waiting on this?
Well, look, the cash burn is what it is, and these companies have been very good at managing costs historically, and they've really done a tremendous job, to date. Even in the second quarter, United was burning $40 million a day. So at least directionally things are getting better. But as I said earlier, these airlines are avoiding the real restructuring that might need to take place if the kind of impairments to business and international travel don't come back. I mean, this domestic market, it is encouraging, right? I mean, there's no doubt that some people are flying here in this country, but really until we get a vaccine and open borders, that's going to spell some trouble for airlines like United, American, and Delta that really rely on that international long haul business. So their cash burns are going to be higher, just based on the nature of their businesses and the fact that they haven't really gone for wholesale restructuring just yet, in the hope that this would turn around pretty quickly.
All right, Peter McNally of Third Bridge, great to get your perspective on this. Thanks so much for joining the show today.
All right, good to be here.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.